which means we are now preparing to make money. Boss, let me tell you what's happening today. We're beginning to see the green shoots. There's been a lot of policy changes in the past couple of weeks that are indicative of the right directional policy movement. Take, for instance, the issue of portfolio investment. The central bank governor said yesterday that they've been about 1.1 billion trade in the NIFEX market, the window that was open for portfolio investors and export proceeds. And the central bank only accounted for 30% of that, which means at the appropriate rate, investors are ready to bring money into the economy. And that inflow of investment is what has triggered the market rally we've seen in the equity markets in the past 2-3 weeks. So the key thing about the market is that the market is subject to the macroeconomic environment. Situation where the economy is contracting, foreign exchange policies are unstable, then you're not going to see a lot of investment in capital market instruments. And that is why the market, none of us would say, let me not say none of us. There may be bellwethers that are in the market, but most people would say they didn't make money last year. But the opportunity to make money are looking very obvious.
If you didn't make money last year, I'm not sure if you made money in 2015.
Yes, the market also went down.
Because that was a transition market.
Yes. So both 2015, which is why when we're talking about the appraisal of the government for the first 2 years of its tenure, you have to look at what happened in the capital market, what happened in the fixed income market, which is some segment of the capital market, what happened in the money market, what happened in the FX market, what happened in the property market. So you look at all the tradable markets, all the securities markets, and you determine whether we've seen growth in those sectors. Because these are avenues for injecting capital into the productive sector. What people don't realize that, look, if you do not have a vibrant capital market, you're not going to have a vibrant primary market. Because the stocks or the bonds that are sold in the primary market must have a market, must enjoy liquidity in the secondary market for people to continue to penetrate the primary market. And for the issuers to have the confidence to come and issue the instruments.
But a very quick one. Are you encouraged by the last 2 weeks? We had Zenith Bank going back to the global market and say, look, we're doing the balance of our $1 billion US, we're doing $500 million. This morning, Fitch Ratings just assigned a B expected rating to UBA's plan to do $500 million globally. So that looks like two of Nigerian banks aside Access Bank towards the end of last year, at least in 2017, two Nigerian banks in Tier 1 are going back globally to say, look, we want to raise bonds and we think this is good time for us. Is that a sign of confidence somehow, somewhere, somewhat?
Yeah, for me, it's an indication that we're turning the corner. Simple is that for a Nigerian resident financial institution to go to the international bond market to raise Eurobond simply means that there's belief that the local dollar liquidity market, the liquidity condition in the local market in terms of dollar will improve. Because if it's not going to improve, if the outlook is not very positive, then you don't expect investors to invest in a Nigerian entity in dollar instruments at a time when they are not sure that Nigerian entity will generate the dollars to pay back. But because we are seeing improving liquidity, the segment of that market that central bank opened has actually opened a vintage for both Nigerian corporates to go back to the international community and say, look, if you invest with me, there's a market where I can always buy these funds and pay you back.
Confidence in, so the FX market is one of it. Thank you very much, Johnson Chugo, CEO at Carry Asset Management. We thank you for your time and very explicit and the way you dissected it for us this morning. We hope to see you more again on the program. And we thank you for always answering us when we call on you to talk about the state of the economy and the markets. Johnson Chugo, Chief Executive Officer and trader at Carry Asset Management. We'll come back after the break. Today is the morning after the first full trading day after yesterday's first quarter GDP, MPC decisions of Do No Harm by Godwin Emefiele and the rest of his team. Let's come back to the market after the break. We thank you all for your comments and questions on the state of the economy and the market as we do Buhari's midterm reports all this week. And, of course, starting from Monday, it's going to be a public holiday, May 29th, Democracy Day in Nigeria. We're going to be all through this week and all through next week. So keep it coming. We appreciate all what we're getting through your feedback from on Twitter. We'll put some of them out there on the TV screen. On Monday is going to be a very special edition, a very special day for Nigeria. But the markets will be closed. Today the market is opening the morning after Q1 GDP numbers and the MPC decisions. Rotimi Fakaijo is one of the traders who speaks to us regularly here on the program and from downtown Lagos. Rotimi, good morning.
Good morning, Bolton.
Yeah, so when the announcement came yesterday that the GDP numbers was a little bit still underwater, 0.5%, and that Godwin Emefiele and the other 7 members of the team yesterday says we want to do no harm to the economy, to the wealth of Nigerians, the income gap, so we're keeping all the rates unchanged. What's your reading?
Probably the wise thing to do would be to leave it as status quo. And, well, even for that alone also is a positive to the economy in the sense that there is consistency in policy and a lot of investors can actually plan with that. So, and that also is reflective in the affairs of the capital market. I will taking it with good heart, and we expect that whenever there's going to be any change, it's definitely going to be changes that will impact positively on the market.
This is the morning after. How's the market shaping up this morning, having digested both the GDP and the MPC decisions?
Well, incidentally, it is affecting the market positively. We started with about 0.07% when the market opened, but right now the market is trending at 0.42% positive. We traded 46 million shares for a value of 337 million. Only the insurance sector at this point in time is actually trending negative. All other sectors are up. So we expect that the market may be able to keep this. Also, the petroleum sector, the oil and gas sector is actually keeping the market up with the transactions done in the Seplat PLC so far this morning. So we expect things to continue to improve because there is really no stock on that threat of offer at this time.
In other words, where the market is looking green, digesting all of that, you says the market index, composite index, about 0.42%, what we call the all-share index, and that looks like, yes, the oil and gas is up. But quickly, a few seconds, what's the banking sector looking like?
Yeah, the banking sector started negative, but now it's trended positive in 0.05% positive. And there's every tendency that it's definitely going to get better than that. So it's all around good for the market at this time.
Okay, Rotimi, thank you very much. I'm sure we'll have a lot to talk about in the days ahead. Rotimi Fakaijo, trader and chief executive officer at Enterprise Stockbrokers. Let's return back to what's the stories making the headlines for the week today. The acting president, Professor Yemi Osinbajo, is meeting with the senior and mid-level public officers across the country, and we at the Villa to bring them up to speed on the new 3 executive orders and how it will be implemented. That is taking place over there. Meantime, this morning, the Lagos Chamber of Commerce and Industry, the largest chamber of commerce in Nigeria, issued a 1-page, 4-paragraph statement stating that they commend the Buhari's administration for signing these 3 new executive orders last Thursday, May the 18th, and says that on their own part, the chamber will monitor the implementation and the timelines that have been set, monitoring all the MDAs involved in the execution of these 3 executive orders, principally on the back or on the pillar of the ease of doing business. And there'll be a report feedback from all the private sectors involved in that. And of course, we've gotten some analysts' reports on the MPC do no harm yesterday regarding the state of the economy and the market. Says the outlook from United Capital is light at the end of the tunnel. We thank you for watching. This is Business Morning, Wednesday, the 24th of May. I am Bosun Amofai.